Well, welcome to this week's market wrap-up. Here I'm going to enjoy sharing with you what went on over this last week. And then we're going to talk about some charts, and we're going to look forward to what you might anticipate in the coming week. So as always, it was a very busy week in the market. But we didn't see as much fluctuation as we have, or as much movement in the market as we had over the last about 2.5 weeks or so. It was a little quieter. Not to say that there wasn't a lot happening, but the daily ranges were a little lessened this week than what we had seen over the last couple of weeks. So this week on Wednesday, the big news was the Fed meeting minutes from July. It didn't have a lot of impact in the market, though, even though these were from the July meeting, and they were, talking about certainly the decrease in the interest rates, concern about the job market and such, but not too much a movement in the market. It's because they were still waiting for some jobless claims that were going to be issued on Thursday. And then we had the Jackson Hole Symposium, which happened on Friday, it's happening over the last few days. And Federal Chairman Powell gave his speech on Friday at the symposium. So that was what everybody was pretty much waiting for after the jobless claims on Thursday. Now, Thursday was not a good day for the markets overall. The S&P went down about 1%. The bonds tumbled. It's because the unemployment rate actually ticked up to 4.3%. There was also a change in the overall job creating of the jobs. They adjusted the figures. We created 818,000 less jobs in the previous year than what was previously reported. So that being said, what happened then is that what is called the Sahm Rule was triggered. Now, this is very interesting. The Sahm Rule was created by a Fed economist named Claudia Sahm, and this was done back in 2019. And you can imagine that during the COVID economic chaos and all that, that was certainly looked at very, very carefully, very highly. It is because when that is triggered, there is momentum in the talk of a possible recession. So, all of those variables came into the play on Thursday, and like I said, the markets went down. And then we had Friday. So then we had meeting minutes, our Fed speech on Friday. Chairman Powell gave his speech. He reiterated the fact that he does want to see some decrease in the interest rates, probably about 50 basis points. He was also very strong as far as the overall economy, the strength of the economy. So, the markets then, sigh of relief, and then they went back up. So let's kind of take a look at our charts now to see how they looked. In front of you here, this is the S&P futures market. This is on a daily chart, and this is over the last week. You can see, as I said, there wasn't a whole lot of movement. Now, like I said, Thursday we went down 1%, down 50 points, and then Friday, during the overnight hours, we had a gap up. So we never closed that gap. So there was a lot of strong momentum even leading into Friday's opening, and then it just continued. We had a few little retests, but then again on Friday it was an inside day, meaning the range was within the range of Thursday's day. So then you kind of wonder, well, how strong is it? They were recovered, but are you willing to take it even higher? So that's what I'm kind of watching for here on the S&P, to see if we can break through that this last week. Okay, so also let's take a look next at, these are two charts. This is the NASDAQ over here, and then we have the Dow over here. Now you can see I have some ranges indicated that I have been watching. Let's try to get that a little bigger for you. Okay, yep. Let's try that again. Okay, let's look at the NASDAQ first. The NASDAQ was the weakest of the three major indexes over this last week. It did not recover as much as the S&P and the Dow did on Friday. It still certainly closed higher than what it had on Thursday, recovered some of that loss. But let's take a look at the price action, the lines that I have here on both of my charts. We have a support and a resistance line on both of the NASDAQ and the Dow. Like I said, the Dow here was much stronger on the week. We also had some manufacturing reports came out, which are typically stronger for the Dow than what they are on the NASDAQ and also on the S&P. So the Dow had a little bit more movement. It closed up about 450 points on Friday. So if you're an optimist like I am, that was really a good trading day if you're trading the Dow. Both of the Dow and the NASDAQ, like I said, I have some price lines here for some support and some resistance. You can see we are within this range here. If you look left on your charts, as I always tell you to do, when you're looking to see, well, how far is it going to go down? How far is it going to go up? There's going to be some means, there's some reason why it stops where it does. So look at on the Dow, look at that strong momentum candle here we had. We knew that there was going to be some resistance there and some support, I should say. The same as on the NASDAQ. Look at this level right here. It did not go below that. So, you always want to see, where the big picture is. I know you probably trade as I do. We look on the smaller time frames as well, on the 1 hour and the 15-minute possibly, to kind of look for those ranges for your day trading. But always be aware of what's going on in the bigger picture. I think I've said that probably many times. One other chart I want to take a look at and talk about. This is the euro. And you know that the dollar has been in a free fall with all of this information and all the anticipation of the interest rate reduction that's coming up probably in September. So that devalues our dollar. Well, in kind of a mirror image of that, the euro is the most correlated related currency to the US dollar. So that's why I have the euro up here. Like I said, I'm an optimist, so I like to see my charts going up, and I like to distinguish some patterns that are taking place within those charts. So on the euro, again, this is the daily chart. Look at this flag pattern here. We had a strong movement up, and then we created the flag, and then it did break above that, and then it continued its move up. So that was a really interesting pattern, I believe, and I like to look for those. Now, also I have the Bollinger Band on here, and I've heard before the kind of walking the band. I mean, it can walk the band for a very long time. Just because it hits the band doesn't mean it's going to reverse back to the mean right here. But we'll see how long it does continue the walking up of the band. If it will break below the mean, then we're gonna be watching for a short for certain. And this is a price line up here that I have for some resistance that I'll be watching that actually happened way like a year ago. So we'll see if it does break through to that. Last thing I wanted to just share with you, like I was talking just about the euro. This is a chart of the US dollar, and poor dollar, it has really come down. But right now it is at a quite a level of support. So let's watch and see what's going to happen in the next few weeks, particularly leading up to that rate announcement we'll have in September. So it will be interesting to see how all that pans out. Now, this next week is not a whole lot coming out as far as market indicators. We have our usual oil inventory on Wednesday and the jobless claims again on Thursday. So we'll see if that has any impact at all. Of course, we are going into a holiday weekend. Yay! So we'll see what happens. Now, I want to also share with you, September can be one of our poorest performing months overall, and it's kind of a continuation of you've heard of the sell in May, go away. People are, maybe changing their portfolios or what have you, and then going away for the summer, kind of taking a breather, and then getting back into the swing of it this fall. So in September, it's a little bit calmer, and then the volatility typically will pick up again in October. So it's a change of possibly portfolio managers on the mutual fund side, tax preparations and these kind of things. So just another little bit of interesting market trivia for you. So I hope you found this helpful. Please, of course, subscribe, comment. I would love to get some feedback from you all. Take good care. Trade with traction, not distraction. Thank you so very much.